Hey everyone, welcome back to the Mark Loeffler Experience. We got another great show here for you today. We got my good friend Andrew Hines on. He's a bit of a catalyst of why I started the YouTube channel. So you can thank him or you can send him hate mail, whatever you guys want to do. I mean, that's up to you. For everybody, if you're new to the channel, please subscribe. A bit about me. I'm a real estate investor, have about 200 units, mainly focused in Hamilton, Ontario. I'm a real estate agent. I help people buy and sell multi-unit apartment buildings and commercial spaces. I trade stocks. I own a bunch of small businesses, from restaurants to mortgage brokerages to meat companies to I don't even know sometimes. So anyways, that's who I am. If you like what you hear today, please subscribe, smash the like button for the YouTube algorithm. It really does help. So let's get started. Andrew, welcome, my friend.
Mark, thanks for having me.
Yeah. So Andrew, you have a really highly rated podcast on Apple.
Yeah, it's doing all right.
It's doing all right. We're going to link down below for Andrew. And that's obviously I was on his show, and that's how we got to know each other a little bit better.
Yeah, that was a great episode.
We've kind of been, circling each other for years. And then obviously you put it on YouTube as well.
Yes, yeah.
And then, so he's about 40 subscribers away from hitting 1,000. So if you're watching this and you like what he has to say, we're going to put the link below. Definitely go follow him on YouTube as well.
Thank you.
So we'll get you to 1,000. This video will get you to 1,000.
I'm hoping so. Yeah, that'd be great.
Yeah, for sure. All right. So other than being a podcast star and a YouTube soon-to-be star, I kind of wanted to have you on because you do development, right?
Yeah, so I've gotten involved in development. It all started back with construction, but I've basically been involved in development in my own attempts and then helping a developer kind of finish up stages. So at various parts, it's kind of been around my my atmosphere and around what I do for the last 5 to 8 years. I've never gone through the full thing start to finish, but I've been in different parts of it all the way through.
All right. So this interests me because I had a deal come up yesterday that I'm looking at buying. So buy a piece of land and build 15 to 18 residential apartments on it.
Oh, you're just talking like apartment units, so 15 to 18. Okay.
Yeah. So, 18 two-bedroom units or whatever. It's down the street from one of my other buildings. Hamilton, yeah.
Okay.
So I think I can get an okay deal on this. We better lock it up before this video comes out on Wednesday. So, I mean, do you have? I know you're building townhouses right now.
Yeah. So I'm doing a set of townhouses. I built 27 towns back between 2016 and 2018, and I'm doing another 15 towns right now. So do everything from the in-ground work. The roads, sanitary, and in this one we have a stormwater detention pond, and then of course the actual build of the units as well. Okay. So that's what I mean so in order to do that, so traditionally I was just building, but I would get stuff when it wasn't quite ready to build, so then I would be helping out with the development side of things too, just to get it moving along.
Yeah. So you have a construction company, obviously,
yeah,
that does new builds. I know you're big in student rentals as well. Mm-hmm. So let's obviously talk about that, because that's what allows you, basically, you're pretty financially free, are you not?
Yeah, so I keep my living where it's like comfortable. I don't need to earn a whole ton. So between my rental properties and what I do with the builds, I like to kind of gauge my spending much less from my income so that I have the ability to kind of selectively choose projects and choose things to work on, which I think you do too. You don't really want to have to work. You do work because you find it enjoyable.
I do like helping people buy apartment buildings.
Yeah, and that's rewarding too, right?
Yeah.
So you can be selective about that. And that was one of those things that was so critical to me, was to be able to be selective, to be able to not have to do all the work that comes my way, to be able to say no to things that I don't think are a great fit for me personality-wise to want to do.
All right. Well, let's talk student housing and COVID.
Yeah. Student housing and COVID. That's a tricky one.
Yeah.
So what I've seen so far, and it was like really worrying to me when it first happened, was I saw that basically assets were going down in price initially when COVID hit, because everybody's looking at it saying, are people still going to school in September?
There's a 2-week period. At least on resident. I don't do many student rentals.
Yeah.
Yet I found that there was a 2 week period in March
Or they
that
went down a little bit.
if you bought during then,
Yeah.
you're up like 20%.
Yeah, you did well.
Yeah.
Most of my students are back. I mean, with the exception of maybe one person out of every other house that hasn't come back yet. But, you know, within a week or two of the start of September, people were back.
Okay.
And so fingers crossed that stays. I think the optimism is there. Most people think that school will be back by next year. And then, of course, there's just the students that they're missing out on their university experience. So they want to go back. Like, you would not have taken that experience from me. I would have either deferred and you know, if I was going into first year, I would have said, no, I'm going to go next year.
Yeah, but you couldn't even travel.
Yeah, I guess not. I guess not. No, I get it. But I mean,
No,
university was amazing. Like, I wouldn't have wanted to give that up.
No, I agree. I left Toronto because I wanted to have that experience.
Yeah, you want to get away.
Yeah.
Yeah, I've had students say to me, you know, I just didn't want to be home. You know, I didn't want to stay at home anymore. I was going nuts. Wanted to get off to school, and they're paying rent anyway. So I'm just actually about to send out my renewals for next year. So they're going to sign for May 1st. So I just do a renewal extension agreement with them.
Really nothing. I mean, there was that bit of panic up. I mean, we were all doing it. Like, you know, what's April 1st going to look like? Are we going to collect rents? Yeah. What's, you know, and I know. Do you know Mikey Ulano?
No, I don't actually.
He does a bunch of student rentals around Brock.
Okay, Brock.
And you know he had a bunch of people just go and did say, hey, I guess foreign students, right. And you know they didn't come in, and you know he re-rented probably 80% of what. There's still that 20% that didn't rent out. It was probably older.
Oh, so he didn't already have a lease in first for May 1st coming up.
He did.
Okay. Oh, and they just bailed on him.
Well, foreign students.
Foreign. Oh, foreign. Yeah, that's right. That's right.
So, I mean, there's that. So there's still that little bit of, you know.
Well, there are people who are going to be affected by this.
Oh,
like,
yeah.
There's no question. And I know in other markets, like a friend of mine's in the Windsor market, and he says there traditionally it's mostly September 1st rentals instead of May 1st. So in London, I do May 1st to the end of April,
100%.
Which is the way you want to do it, because otherwise on the students last year, they might just bail on the last 4 months.
Well, you're renting it in November, December. I mean, I remember when I was at Western, like all my buddies were going out in November. They're like, oh, we got to go look for a place now and get our 7 guys together. And I'm like, pump the brakes. I'm going to look in August.
Which you can do. Yeah. You can do. I think for a lot of kids, it's stressful. Finding a place is stressful. And especially in this time, I used to think of it was all the landlord stress, but no, the kids are so stressed that they wanna find a place. So I reason with them. I'm like, look, guys, like, you know, this is the prime time. You know it. I know it. I don't want you to lose out on a great place. I'd rather keep you here. You're doing great as tenants. I'd love to keep you. And they, you know, for the most part, just want to resign.
Yeah.
Of course, you know, some are going to leave. They have one member they want to replace. Usually they work that out among themselves. So
for sure.
I will say, like, between family rentals and student rentals, like there's a stigma on student rentals. I can't see why overall, because I found it so much easier to manage than families.
Well, I know that whoever I know that basically lives off the income from real estate, they're either doing student rentals and they're self-managing, or they're doing Airbnb and they're self-managing.
Yeah, self-managing is critical.
Yeah, I mean, because I don't even know what somebody would charge for a student rental. Is it like 10%, 15 plus? I don't know if the rents are.
The rents are so much higher. I've been told 4 or 5%.
Okay.
And then they'll charge leasing fee on top of that, which, I mean, that adds up a lot. Then you're a couple $100 a month plus your leasing fee. So what I used to pay is I was paying $125 a month flat per house, and then I would pay half or 3/4 month plus HST for the last month's rent every time they'd re-rent. And I just calculated it. In 1 year, I was coming up to this decision of, am I going to let a rental agent do all this? And I'm like, no, screw it. I did it all myself. I saved myself like $12,000 immediately by just re-renting 4 places myself.
Yeah.
And I said that to the property manager. I'm like, look, this is too much. I'm going to rent it myself this year. And they didn't like that because it's a big source of income for them. So they fired me as a client. Fair enough. I get it. But what I started to realize is I could implement the systems myself. I hired my own maintenance guy. I hire people. I even have people that just help me out that I'm kind of mentoring that will go show the places for me. So what people hear me say self-manage. I don't mean do everything yourself, but I do mean take the control internally, and then you can hire individual people to do work. That to me seems to be the model that works.
Well, it's like when you're building, right? Yeah. If you're the general contractor, then you're making the lift.
Sure.
If you're the property manager, you're making the lift.
Right. Well, and the big thing there is you're wanting to be in control as the builder. There's a timing element. Timing is so critical, and this is the reason I started the construction company, is because I would take possession of a place April 30th or May 1st, and I'd have tenants signed up for September 1 after my reno. So I'd be doing, a partial gut, an addition, I'd be doing all this work, and I'd have to have it closed in and tenants move in September 1. I knew that if I hired a GC, you get promises and they don't deliver. But when I'm my own GC, then I have the ability to say, well, yeah, you're not showing up, you're fired. Okay, next guy. Yeah. So I could weed out the people that were inefficient. And there are pros and cons to that approach. It was baptism by fire, but man, did it ever make me efficient, and it made me a lot of money because I was able to do that which I would not have been able to do otherwise.
Yeah. Well, you know Josh Doyle, right?
Yeah, Josh.
Yeah.
He's got a good background and experience there in that industry too.
Well, yeah, so we had him on last week, and he was talking about his triplex, and we went through the numbers and all that, but he says, yeah, I made so many mistakes for hiring different people and same thing, right? Yeah. Yet now you get a crew of good people, and the next one just becomes that much easier.
Oh, absolutely. Once you get rolling, but this is what I say to people who ask me, is it going to be the easiest solution? Absolutely not. I know guys that do project after project after project using a GC. They're basically in the business of renovating and flipping properties, but they're not taking full control of it. And all that's really happening there is you're leaving money on the table. It doesn't mean that that's not the right thing for you. Everybody's different.
Well, it depends, right? You got to look at it and say, okay, how valuable is my time? Exactly.
Well, and I look at it as a time investment because I don't think it takes me any more time necessarily to do a reno. Maybe a bit more. But I get the result.
I meant more for maybe they have a full-time job,
right?
And they make $250,000 a year.
Exactly, that scenario is fine.
Then they're not going to rush out after work, and because they make more money, no offense, buying another property,
right,
than they ever would that saving that $10,000, $15,000 on a reno, and they don't care about the extra month typically.
Right, and if it was just the cost difference, I would tend to agree with you. I think there are other elements there, like the non-deliverable. Like if I can't put my tenants in the place on September 1 and then they sue me because they have to go, rent another place, and there could be all kinds.
Put them up in a hotel.
Or I got to put them in a hotel. Just the gray hairs and stuff I didn't want to deal with.
You're starting to get a few.
I get in a few, yeah. Trying to catch up to you, Mark.
Well, I think I got a couple of years on you, so.
Yeah, my parents both had grays pretty young, so. Oh, well, I'll try. I might have to start using some Grecian here. We'll see.
No, don't do it. It's distinguishing, I've been told.
Okay, fair enough, fair enough.
So student rentals. So you have 4 student rentals. How many students do you have?
I have, what do I have in those? I think 24 students across those 4. I've got another multifamily and then another single-family home.
All in London?
These are all in London. And it's when I say the number of doors to people, it doesn't sound impressive, and the reason for that is like these are all pretty high-end assets. So, like the one student rental is worth just short of $1 million because of where it is and what it generates. And
so how many bedrooms is
that? One's 6 bedrooms, 6.5 bathrooms, pretty much on campus, just right on the border of campus, and
right by the gates.
Right by the gates, inside the gates. If you know, there's that little drive right before the bridge. Yeah, it's on that one.
Okay.
Yeah, so. That's the kind of asset I prefer to own because at the end of the day, the students jump on it. I had I think 13 groups come through, all wanted it. I had bids on that house, and they basically bid up the rent.
So what are you getting on that one?
$860 a bedroom.
$860 a bedroom.
Yeah.
Wow.
That's pretty good for London, but that's not the top. There's still much more to go.
So you're 48.
5160. Oh, that's fast math.
Yeah.
Good job.
Wow, thank you. Wow, 5160, gross $1 million, or worth $1 million, just under.
Yeah. I mean, that's obviously debatable, but I mean, I look at the cap rates that my other stuff get, and it's right in line. That puts the value up there.
Yeah.
And then there's the intangible of like, why wouldn't you want to own right there if you had to own a student rental?
I mean, you never sell that one. What'd you buy that for? How long ago?
I bought it for $422-ish. I think it was like a hair under that. In a
420, whatever.
6 or 7 way bidding war. It was listed for $389 at the time, but I just knew that location was a kind of a no-brainer. And I sat on it for a couple of years before renovating it, and then I finally renovated it, put about $300,000 into it.
Okay.
And so it's like beautiful. It's in its highest and best use right now.
So obviously you refinanced after?
refinanced after. The challenge I was getting into is that the bank doesn't want to.
Student rentals.
The bank, well, they will do them. There's ways to slip that through, but they don't want to recognize the income I'm making from it. They look at it as a family rental, so they're only giving me credit for getting like $3,800 a month. So my loan to value, ever since the stress test came in, has been closer to 65%. Which you said I'd never sell it. The only reason I might sell that one is for me in my personal situation with the number of properties I have and my qualification. It's harder to get a good return on equity relative to what I could get if I invested elsewhere.
So if you want to know what Andrew's talking about, we're going to link down our ROI or ROE talk that I did like way back at the beginning of my
Super
channel.
critical for investors to understand that. Return on equity is everything. And of course, you have to consider so many things. Like, of course, the intangible of I love this asset. The intangible of I'm going to pay tax if I sell it and redeploy that money. So that is a cost too.
Yeah, for sure. And I mean, so it's funny. I don't know if you watched the video I did when Kevin O'Leary was going through Graham Stephan's.
I saw that you posted
portfolio.
it. Good thumbnail on that one. I hadn't had a chance to watch it yet.
So he talks about don't let paying taxes affect your decision.
And I think that's probably wise to some degree, but we do have to take Kevin O'Leary's position into account.
Well, and I say that in there too. And I look at it and say, okay, so when I do the math, I say, okay, I'm going to have a capital gain. It's going to be about 25% of my overall gain. So if it's a $200,000 gain, it's a $50,000 payment.
Mm-hmm.
So now I have to take that same money and I got to make $50,000 before I even break even.
Right.
So does my next deal, or whatever that is, does it make up for that?
Yeah, and I would love to, like I have my spreadsheet, to calculate cash flow, return on equity, all that stuff. I would love to have something that factors in taxes to help make that decision. If I get motivated enough, I'll make a spreadsheet that calculates it. But
so I just do it in my head.
Well, see, that's the thing that I like the back of the envelope numbers more sometimes.
Yeah, I'm that.
Yeah.
Just write it down.
Yeah, like it should make sense in a very simple approach.
If it doesn't make sense in a simple approach and you need to have all this fancy stuff, then probably not a good
right. Yeah, the whole Occam's razor, the simplest solution is the right one.
That's right.
Typically.
Yeah. You're not the developer, you're the builder. So on that, buy my piece of land, what's it going to cost me to build 18 units? Let's talk 700 square foot, 2-bedroom units. So what are we talking? 7,000, say 12,000 square feet.
12,000 square feet, including common areas?
3 floors, yeah.
Including all your hallways and stuff? I mean, are you going to have any underground parking?
Hell no.
No, so just like surface parking?
Yeah, like 2.5 story, half grade below.
Yeah, I mean, brick probably.
Yeah.
Yeah. I think you're going to be around $200 a square foot.
$200 a square foot.
Now, I mean, and this is the thing, this is a moving target because in the last half a year, construction costs have just become astronomically more expensive.
So we're going to talk about that in a second. I want to just run quick numbers in my head. So it's going to cost me $500,000.
Plus your development charges.
Okay, what's that, about 100?
Well, you have to look at City of Hamilton, what they charge there. So they might be $20,000, $30,000 a unit in development charges.
But it's rental. They actually let that go.
Okay, so some cities have an incentive. I haven't looked into Hamilton.
Hamilton does.
They're giving you a credit if you're doing rental properties.
100%.
Well, that's good.
So I have to pay it up front, but I don't pay taxes for.
Okay, so what they'll do is they'll credit it back on your property tax for X number of
or
years.
Something. I think you pay half or whatever it is. Yeah. So okay, let's call it 20 grand a piece for that. So 360, 500. He said 200 door or 200. So that's.
Remember, plus
12,000.
Here, I'm going to do that for you. So that's $2.4 million to build. This is where it gets tricky for people because you aren't necessarily going to want to proceed with that when you realize just how much it is per door. But you and I both know the velocity of the increase of value in these.
So number one
units.
is if it cost me $3 million overall, which is
well, if you figure in
land
HST, because you're going to have to assess HST on that too, building from scratch.
What? Do I have to pay HST?
Yeah, unfortunately, you
Even
have to
on
assess.
a rental?
Yeah, it's cruel.
Damn it! Damn you, federal government. HST too, not just GST.
Yeah, it's HST now. There are credits. So obviously, speak with your accountant. You don't apply for all. You don't qualify for all of them, but there are some that are applicable.
I mean, okay, so.
And then you'd want to condo that. And then of course you'd have your soft costs too. You'd be into a couple $100,000 in soft costs on top of that. So that's why $3 million isn't a bad guesstimate there.
Okay. So 3 million. I mean, brand new. I don't have rent control. And we'll see if it's worth it.
The no rent control thing is pretty fantastic, unless the Ford government does what was done in the previous administration and does a new restriction.
Or whoever comes in after.
Yeah. Like it wasn't Ford. Ford said he more or less undid it, but for only here going forward. So I think in what was it, 2018? Anything after 2018, and now that's until they change it again.
Yeah.
So I have one unit that's not rent controlled because I built it in the backyard of another building. So that's kind of nice.
Very nice.
It's just flexibility, right? If you don't like your tenant, I'm not saying you should do this, but you could always say, hey, here's the new rent.
Yeah,
what do you think?
eviction, yeah. Hey, your rent goes from $2,000 to $4,000. Yeah.
And Mark, if you follow me, you know I'm a very invisible hand kind of guy. Let the market take care of itself. I think good people that do good business get rewarded, and I would never do anything unreasonable to one of my tenants. I'm always very reasonable.
Yeah, it's doing that to a very unreasonable tenant.
Yeah, if you have a very unreasonable tenant, then you respond in kind, I suppose.
Yes.
But actually, it's a reasonable response for their actions. So
100%.
Yeah, so it's not really in kind.
Yeah. All right. So we started talking about, you started talking about increases in construction costs. So let's just talk. I mean, I just did a market update, so we can geek out on economics if you want.
I love it. Yeah.
And I was talking to a major condo builder downtown Toronto, and he's saying land values are going up for them to buy. And obviously, construction costs are going up.
Mm-hmm.
The only thing that's coming down right now is obviously carrying costs, right?
That's the one thing. As an economy, oh my goodness, there's so much to be concerned about right now. But for build costs,
So what would concern you in this economy right now?
well, okay. So if you think about economic theory, real crash course basics, when in an economy, the way that governments stimulate it to get it to grow, which I mean, in Canada, we can all agree that a growing GDP is what our government wants. They want to see it grow because everybody's servicing debt, and in order to pay all those interest payments, you want your overall business to be growing.
I mean, that's the whole theory, right? You take debt on at this level of your income, and then you bump up to here.
You keep growing,
and you keep growing that income, which is basically what the government is doing. Is building their income faster than they're growing their debt, and that's why they can continue to grow, and that's why we'll never pay off the deficit.
Well, and that's getting into the weeds. So anyways, we want to stimulate, right?
Yeah.
We want to stimulate that growth, and normally what the government would do is they would decrease interest rates. But the problem is when you decrease interest rates, you get heavier inflation, and inflation is basically, for anyone who doesn't know, is when your buying power goes down. So this coffee used to cost $1, and now it costs $2. So you might make more money, but in real buying power, meaning what you can really buy, you can't buy as much.
So I've been, obviously, for that video that I just did on Monday, so we'll put the link in the description below, yet real wages are actually going up right now.
Real wages?
Yeah.
But that's according to our government's issued consumer price index. That's what they're saying it is.
Well, I mean, Benjamin Tall says it. When Benjamin Tall talks, I kind of listen, right? Like, he doesn't take that just as, he has a lot more information than we do.
But he does have corporate bias. He is an employer.
He does. He's with CIBC, obviously.
Must continue to say what CIBC would think is approvable.
I've never known him to be a corporate shill, though.
I'm not saying corporate shill. Not saying corporate shill. So I'm just taking basic economic theory. How can we stimulate our economy from here? We can't really lower our interest rates anymore. Maybe a little bit.
We can pump free money into the economy. CERB.
Yeah, you call it the CERB. CERB, economic easing, we'll call that. That's just money that shouldn't be in your economy. So they're throwing this all into our economy. So what I see coming is a massive explosion in inflation. But we are so debt riddled, and all these people going into debt right now, all these businesses going into debt. If our government was to raise those rates again, they would sink so many of our businesses. So they won't have the ability to do that. They'll have to look at it. They'll say, you know what, we can't raise the interest rates.
Well, they can't raise the interest rates because they've spent so much money.
And they've
taken on so much
debt.
debt.
They have too. So now we find ourselves in a position where we're ripe for inflation with no way to control it.
I don't think we're going to see the 1970s again, if that's what you're going at.
I think we could.
So this is what everybody feared in 08, 09.
And the reason I don't think it happened in 08, 09 is because most of the stimulus went direct to corporations and back into the bond and stock market, which did go up significantly since then.
Well, 100%.
Yeah.
More than 100%.
This is the first time we've really seen it at the consumer level with so much money that's being created. So value is not being exchanged for this money. It's being created and thrown into the economy at a rate of 400 billion this year-ish, 400 billion of fictitious money that shouldn't exist. And then when you add in the fact that banks do fractional reserve lending, which means they'll lend out 10 times that because they only have to keep 10% reserve. So now we're talking about $4 or $5 trillion being added to the economy. The economy's a sponge. It's going to soak that up, which means your prices go up.
It goes somewhere, right? And that's, obviously the housing market, it's going up, right? Like and
we're seeing it now in real time. We're
seeing it now in real time. Now, obviously, there's pockets that aren't, like downtown condos.
Right. There's different economic factor there. I think Toronto is going to come back, but I think it's going to hurt first.
Well, 100%. I said, you're going to see in a year or two, young people still want to go live downtown. Yeah. By the way, they're going to get jobs back down there, right? When this is over, people are going to go and restaurants are going to open and bars and whatever, and people are going to live and work downtown again, right? So that's what the major developer was saying. He's like, I'm not that worried. I'll buy land now. Yeah. It'll take me 4 years to take it through the approval process, and I'll be golden.
On our track right now, no problem. Inflation will heal all wounds, but they'll also create other wounds by that point too. Because you have to realize we all pay tax on our capital gains, and now we're all going to have gains that look like this, but in real dollars, they aren't. In real dollars, a gain was this, but it looks like it was this.
Well, if we own real estate, maybe we just refinance it
and don't sell.
Then you can and we can defer those taxes.
Yeah.
I'm just saying.
Isn't it? But it's still the way I look at it is our government is basically stealing from us in a very secretive way. You might not agree, but not most people don't understand inflation. So it's sort of like the government stealing from you by printing too much money. So they're stealing away if you have cash. People who sit on cash in their house. And I just feel for those people because at the end of the day, they don't realize what's happening. And that's why I'm very adamant. Anyone who follows me knows. Like I really think we need to get off the CERB. We need to get back to work and really match our value to our spending.
100%. And I don't know if you saw the job stats for September.
They're pretty low, right?
Well, it's 9% unemployment. 334,000 people went back to work. Majority was full-time. I think a lot of that had to do with parents going back to work with their kids in school. And then the rest of it is basically, it's all it's in the service economy, right? That's what we're missing right now. It's those 600, 700,000 jobs that we would have had back in February that we don't have right now is in that service economy. Yeah. And it's unfortunately the majority of those people are renters, and they're not. And a lot of them just went back to live with mom and dad.
Right. So they don't need it, and that's the tricky thing. And I've heard this. Like you're a restaurant owner as well, and I've talked to some restaurant owners, and they're like, we have the demand. We have people who want to come out, but we're having trouble. The one guy, he couldn't get any of his old employees to come back.
We just opened a brand new restaurant in the pandemic. So we opened one 2 weeks before the pandemic, and then we just opened one again this weekend. And the local economic development office loves us in Hamilton. They're like, look at these people doing stuff during the pandemic, right? And I just hope Doug doesn't shut us down in the next couple of weeks, but we'll cross that bridge when we come to it. Yet again, though, even to fill the positions, like last year, it would have been a job fair in a day at one of the restaurants. We've had great people coming through and doing, and yet now it's really a lot of work. It took us almost 2 weeks to fulfill the staff of the new restaurant, and we have the 2 restaurants to pull and do whatever from, and it still took us 2 weeks. And it was to find good people who actually want to show up to work and be polite to people, and they're working for tips, I guess, too, right? So
that's probably an easier sell than, say, for me, staffing people in construction, general labor. I mean, I used to think it was 1 in 20. Now it's probably like 1 in 100 of your hires are going to be people that you're going to want to keep around long term, and that's a tough thing because we're talking about these people you want to get them for the raised up minimum wage that was jacked up 3-4 years ago, and theoretically that should be really appealing, but they don't even care. Like you said, they live with mom and dad.
What's so funny though, like out of that 1 out of 100. probably like a good 20% of those are working for you, and then they're upwardly mobile, right? They're like, you're a temporary
they're
stock.
trying to go up to the next level, and then you add in the fact that, like, I won't throw the name out there, but one of Canada's top recruiting and job posting sites, I posted an ad on there. I'm trying to hire an admin assistant, and he's like, you're going to be upset with the results. I had already had 200 applications in. He's like, you're probably going to be upset with most of what you see there. Don't spend more than 20 seconds. He's like, a lot of them are just fulfilling their requirement to apply for a job. They're not even serious. And this is what's happening right now. So we're seeing the effect of these government handouts truly destroying our economy. And yes, we can overcome, but we got to smarten up. I mean, I know I get a little unpopular saying stuff like this.
Okay.
I don't shy away from controversy. This is just what I see.
If you don't like it, don't subscribe to his channel. Definitely subscribe.
Yeah.
I mean, obviously, this is what I love about this is like, and that's what I love about meeting different people and talking. It's like, you know, and this is a good, like, I mean, living in Canada right now, in the States, I think this is a little different, but we can have this conversation.
We still can. I mean, you know, some people might not agree, and tech companies might not agree, and they might not promote this one as much. But so far, I think market and economic discussions do okay.
Yeah. Well, it's so funny. What's that guy's name? JP, the guy with the long hair that, you know, does the airy fairy videos. And
Awake with JP.
Awakening
with JP.
Yeah.
Oh my God, he's hilarious.
Well, and he did the whole video on YouTube censoring him.
Yeah.
And I was killing myself laughing. Like, it's just so funny. Well, I mean, geez, we've dived into economics and the government, student rentals, development.
Yeah.
What else? What do we need to talk about? Anything else, or
whatever your listeners, viewers want, man. That's
no, I mean, I think we're good. We like to keep them pretty.
Right. We've already gone on, and I hope that was clear and succinct. And I know the economic stuff, that can be a little challenging, and obviously I'm sure you've talked about it a few times, so I'm sure they can dig in a little deeper on that.
Yeah, for sure. All right. Well, thanks everyone. Thanks Andrew. We appreciate you coming on and expanding your views again to the general public, if they wanted it or not. No, I'm joking. But thanks everybody. If you haven't, definitely subscribe. Smash the like button for the YouTube algorithm. We'll see you guys in the next one.